Hi folks, and for today's video and the associated blog post, which I'll post as always in the description, is entitled Making Investing Easier, FAANG Stocks. So there's never been so much interest in investing as there is now. I think a number of factors have made it so much easier to invest your hard-earned cash. The pandemic and subsequent lockdowns for one, exacerbating people's money worries and job security. It's never felt so important to get some money put away somewhere for a rainy day, just in case. Who knows what's around the corner? We all thought things were fine, but, well, could be another pandemic, could be anything. Who knows? Global warming, there's all sorts going on. So people's insecurities do tend to make them try and make plans for the future and be cautious. And 2020 saw the rise of the retail investor. And it was quite a phenomenon to see all these people. I mean, my YouTube feed is filled with people sharing their portfolios every time they so much as cough. YouTubers all over the place, some of them brilliant, giving great content, giving me ideas on what to invest in. And, it's so coupled with, I think, the rise of the two platforms that most people talk about, Trading 212 and Free Trade, both of which now have many, many hundreds of thousands of users, both of which don't have any direct trading fees when you buy a stock, but there are other fees. So obviously you need to look at that. But they both allow as well, and something that never used to be available, you can buy fractional shares. So you don't have to buy a $3,000 Google share. You can have a fraction of it, which allows people to build up stocks, build up chunks of stocks. That's really useful. And these trading firms like Trading 212 and Free Trade all offer referral schemes as well, so people can share the links and, they can get a free share and give a free share, and people start off, they feel like they're getting some value for the money. And I will share my own Free Trade link at the bottom of the blog article, but not on the YouTube. So if you follow the blog, you can get your free stock there should you feel like you want to sign up. So onto the subject. What are FAANG stocks? This is FAANG spelled FAANG, so two A's. So the stocks that make up this acronym are Facebook, ticker FB, Amazon, ticker AMZN, Apple, ticker AAPL, Netflix, ticker NFLX, and Alphabet or Google, as you may know them. All of these are, I'm sure you'll agree, well-known consumer brands worldwide. All have seen exceptional or exponential growth over the last 10 years. And that's the point of this article, really, to point out that investing is as risky as you want to make it. Yes, you can put all your money on a penny stock that might not be around tomorrow, but is that good sense? No, probably not. So what do all of these companies have in common is the question I would ask. And the answer to that is they're the best in their field, and they have few competitors that come close. That gives them an edge, and that edge has made them massive worldwide companies. Possibly the one exception out of the FAANG stocks is Netflix, who seem to be being caught up by a few people, but they are still a huge force in streaming movies and programs. So when creating your brand new portfolio or adding to your existing portfolio, I would say include some of these FAANG stocks. Make it 10%, 20%. You may not get huge growth, but you will get growth, and you have the peace of mind that these stocks aren't going to go down the pan anytime soon. If you diversify your portfolio with some excellent Vanguard ETFs, and there are many, and a few dividend growth companies, as well as your FAANG stocks, you won't go too far wrong. I'd urge you to look at dividend kings, dividend aristocrats, if you're looking for dividend growth. It's easy to find lists of these companies online who have grown their dividends for years upon end. So the whole point of this article is that investing need not be such a risky business if you apply a little common sense and do due diligence. And as I would always say, nothing on here constitutes financial advice. you must invest to your own circumstances, be that a little bit out of your wages every month, as I do, and with some existing savings. But again, there is a whole range of things there for you to look at. And I would say, don't only invest, put things in your emergency funds, and don't make investing the one thing where you've got all of your money. Diversify across other assets. So, hope that was of interest. Please go ahead, read the blog article, like it. And if you like the content I'm doing, please subscribe. Have a great day. Bye.